A person stands at their mailbox, sifting through a stack of mail. They spot a familiar envelope from their car insurance company. They open the envelope with a neutral expression, expecting a small change. Their eyes widen in shock as they read the new bill. A flashback shows last month's bill, $120. The new bill is revealed, $245. The person looks confused and frustrated, thinking about their clean record. A montage of the person remembering, no accidents, no tickets, same commute. They recall being a loyal customer for 6 years. The person sits at their kitchen table, head in hands, worried about their budget. A visual of a grocery list and empty wallet, showing the impact of the price hike. A wide shot shows many people across the country opening similar envelopes and reacting with shock. A map of the United States highlights the widespread nature of the problem. Nick appears, introducing himself to the audience. Nick gestures to a whiteboard with the words "invisible math" written on it. Nick addresses viewers who feel frustrated by rising costs despite doing everything right. Nick encourages viewers to subscribe and like the video. Nick promises to reveal data and 3 specific moves to save money. Graph appears, showing car insurance premiums rising 22.2% in the last year. Nick points to the graph, emphasizing the largest increase since 1976. A comparison chart shows overall inflation at 3 to 4% versus insurance at 22.2%. Nick asks why. With a puzzled expression, a visual breakdown of insurance company finances, $1 in, $1.12 out. A cartoon of an insurance company losing money, looking worried. The house insurance company raises the stakes, depicted by increasing rates. Nick references a 1998 Honda Civic backing into a pole. Simple repair. Mechanic hammers out a dent and sprays paint. A bill for $400 appears. A modern 2024 SUV is shown in a similar fender bender. The bumper is revealed to be packed with sensors, radar, and cameras. A diagram highlights the technology inside a modern bumper. A mechanic looks overwhelmed by the complexity of the repair. A bill for $5,000 appears for the modern repair. It compares the car to a 4,000-pound iPhone with wheels. A cracked iPhone screen appears with a $300 repair bill. A cracked SUV bumper triggers a cascade of recalibrations and repairs. A timeline shows repair costs rising from 2010 to 2024. Nick discusses the psychology of loyalty. A flashback shows a customer happily receiving a loyalty discount years ago. Shadowy algorithm is shown analyzing customer data. The algorithm calculates a loyalty tax for long-term customers. A customer's rate is nudged higher while a new customer gets a lower rate. Nick explains that insurance companies bet on customer inertia. A visual of a customer ignoring renewal notices and not shopping around. Scale tips, showing loyal customers paying more than new ones. Nick addresses the objection, "But I have a clean record." A customer protests, showing a spotless driving record and good credit. Nick explains the concept of a socialized risk pool. A group of drivers, both good and bad, are shown in the same pool. A news headline flashes, "Used car prices spike 40%. An insurance company writes a much bigger check for a totaled car. Courtroom scene shows a jury awarding a massive verdict. A gavel slams down as a $20 million verdict is announced. The payout comes from the shared insurance pool. The final visual shows all customers, including the main character, paying higher premiums as a result. Nick stands in front of a whiteboard, ready to explain insurance math. Nick introduces the scenario. A 35-year-old with a 2020 Skoda RAV4. A digital display shows the insurance premium from 2 years ago, $1,200 per year. Animated graphics show parts costs rising by 15%. A chart illustrates labor rates at body shops increasing by 20%. A graph shows the RAV4's value spiking during the supply chain crisis. Nick gestures to a diagram of an insurance company's loss ratio. A visual compares $900 paid out for every $1,200 taken in by the insurer. The claim cost rises to $1,400, shown on a calculator display. Nick points out the insurance company is now losing $200 per customer. A chart shows the rate needing to rise to $1,400 for break-even. The rate is then shown increasing further to $1,550 for a 10% profit margin. Bill appears, showing the premium jumping by $350 instead of $50. Nick explains that this feels like price gouging, but it's survival math for insurers. Transitions to how to fix it today. Nick introduces Step 1, the 6-month rule. A calendar appears, with a reminder set for every 6 months. Nick explains there's no such thing as a good deal that lasts forever in insurance. Visual shows insurance company appetites changing. Geico lowers rates 1 year, raises them the next. A map highlights Ohio as an example of shifting market strategies. Nick emphasizes the need to shop for insurance every 6 months to a year. A montage shows a user comparing rates on 3 different comparison engines. Logos of independent big and direct-to-consumer insurance brands appear. Nick introduces Step 2, the deductible math. A graphic shows most people carrying a $500 deductible. A worried customer imagines a $1,000 bill. A chart compares premium savings, raising deductible from $500 to $1,000 saves $400 per year. A timeline shows breaking even in 15 months. A calendar flips through 3 years without an accident, showing $1,200 saved. A scenario plays out. An accident in year 3, $1,000 deductible paid from $1,200 saved, $200 still ahead. Nick explains that insurance should be for catastrophes, not small dents. A split screen shows a $50,000 medical bill versus a $500 dent. Nick introduces Step 3, the Telematics gamble. Commercials for Progressive S Snapshot and State Farm S, drive safe and save play briefly. A driver looks uneasy about being tracked by Telematics. A digital dashboard shows driving data being recorded, turns, braking, late-night trips. Nick acknowledges the big brother feeling of being tracked. A visual shows boring drivers subsidizing wild drivers who don't use Telematics. A driver opts into Telematics, and a $400 discount appears on their bill. Nick explains the trade-off, selling driving data for a discount. Nick introduces the final step, the credit score secret. A map highlights states where credit score can't be used: California, Hawaii, Massachusetts. A chart shows the correlation between lower credit scores and more claims. Customer celebrates after improving their credit score by 50 points. Nick explains that insurance companies don't automatically lower rates for improved credit. Customer calls their insurer to request a rerun of their insurance score. A clock shows the process takes 5 minutes. Bill drops by 15% after the credit score update. Nick summarizes, the world is getting more expensive and complex. A montage shows cars becoming more technologically advanced. Nick insists viewers are not victims of their renewal notice. Customer looks tired, staring at a $245 bill, about to let it auto-pay. Nick urges viewers not to let the insurance companies win. Clock shows 30 minutes set aside to shop for rates. A customer raises their deductible, checks their savings, and calls their agent. Nick explains that financial freedom is about winning small battles. A montage shows a series of small victories: shopping rates, raising deductibles, improving credit. Nick encourages viewers, this insurance hike is a battle you can win today. Nick asks viewers to hit the like button if the video helped. Nick signs off. I'm Nick. Thanks for watching. Now go save some money. Nick gives a quick, sharp nod to the camera. Screen fades to black.